Coming at you live from the beautiful heartland, these good old United States of America, right at the confluence of the mighty Mississippi and the majestic Missouri rivers. St. Charles, Missouri. This is The Rant. I am your host, Charles Lamson. I'll be with you for the next 2 hours. All right. Today is Friday, 13th day, Friday the 13th day of December. All right. Year of our Lord, 2019. All right, today's topic. Going to be doing another weekly financial review with Charles Lamson. First half, going to be doing the timely top stories in the world of finance. Second half, going to go into break at the top of the next hour. And going to do some investing tips with me, Charles Lamson. So you guys will definitely want to tell your family, tell your friends. It's going to be an awesome show. All right, so let's get this shindig started. Timely top stories in the world of finance. Thank you, Tibetan monks, for that. All right, let's see here. Okay, so finance. What's going on? Let's see. We got global stocks, and the pound soar as euphoric traders cheer a U.S.-China trade deal and a landslide UK election result. Uh-oh. All right. Let's see here. Hello. All right. I should have queued this up for the show. Oh, shoot. Come on. Okay, so global stocks surged to all-time highs Friday after U.S. President Donald Trump offered to scrap tariffs on Chinese goods set to go live Sunday and slash existing tariffs. Charles, if you have that auto control, what? Oh, let's see. Let's see what's going on here. Oh, okay. Anyway. All right, so global stock surge. Let's take it from the top, shall we? Oh, I keep going in and out, huh? All right. So anyway, okay. Let's try taking it from the top. Let's see what's going on. Global stocks surged to all-time highs Friday after U.S. President Donald Trump offered to scrap tariffs on Chinese goods set to go live Sunday and slash existing tariffs. On Thursday, Boris Johnson's Conservatives delivered a landslide victory in Britain's general election that paved the way for Brexit. Okay, this is bothering me. I gotta see here if I can fix this audio. I'm going in and out. See. Okay, let's. Okay, I'm gonna try and fix this audio. I'll be back right after the. I'm gonna take a quick break. We'll be back right after this. Okay. Okay. Anyway. Oh, well, I'm just going to try and barrel through it, man. Okay, so on Thursday, Boris Johnson's Conservatives delivered a landslide victory in Britain's general election that paved the way for Brexit. Britain's Britain to 250 FTSE 250 hit a new high Friday, and the Euro Stoxx 600 soared to a record as well, while futures signaled the S&P 500 and the Nasdaq would rally from record levels. Domestic-focused UK stocks, including Royal Bank of Scotland, Lloyd's Banking Group, and EasyJet, rallied by 10% or more. Some investors will see today as Christmas comes early, as we see a convergence of two critical political risks coming to some resolve, one economist said. Global stocks surged to all-time highs on Friday after U.S. President Donald Trump offered to scrap tariffs on Chinese goods, set to go live Sunday, and slash existing tariffs as part of a proposed trade deal with China. And Prime Minister Boris Johnson's Conservatives achieved a landslide victory in the UK's general election. The MSCI index of developed and emerging world equity markets touched an all-time high Friday. In the U.S., the S&P 500 and the Nasdaq indexes closed at record levels on Thursday, and futures signaled stocks were set to rally again at Friday's market open. Britain's FTSE 250 of domestically exposed stocks hit a new high Friday, and the Euro Stoxx 600 reached an intraday record. Domestic-focused UK stocks, including Royal Bank of Scotland, Lloyd's Banking Group, and EasyJet, all rallied by 10% or more. The British pound rose by 1.8% against the US dollar to $1.34. On Thursday, Trump signed off on roughly halving tariffs on $360 billion of Chinese goods and suspending a planned expansion of duties to $160 billion worth of other Chinese goods as part of a proposed trade deal with China, according to the Wall Street Journal. Under the agreement, China would purchase $50 billion worth of U.S. agricultural goods and other American products next year. Also, Thursday, the Tories won at least 364 seats in the House of Commons, surpassing the 326 needed for a majority and paving the way for Britain to leave the European Union. Some investors will see today as Christmas come early, as we see a convergence of two critical political risks coming to some resolve. Dean Turnett, an economist at UBS Wealth Management, said in an email, indications of a strong electoral outcome in the UK and developments toward a phase one U.S.-China trade deal have lifted the mood in the markets. They're okay now. Yeah, Pat, I think I know the problem. As far as the beginning of the show, I think I'm coming in. I was coming in Ladies and gents, this is my third show, so here at Revolution Radio. But I think I was coming in a little bit too early. I think that was the problem. I think I should wait till a minute after, as opposed to I was coming in right at the top of the hour. I think I should probably try and wait till like a minute after. So anyway, I know you're not supposed to talk about inside baseball stuff on the air, but hey, whatever. You get what you pay for, ladies and gentlemen. And that being said, this is free radio, but we are also completely audience supported, our listener supported. So please, during this holiday season, if to donate, please go to freedomslips.com. Revolution Radio, Freedom's Lips. Oh, that's right. That's right. We're having an issue with PayPal. I'm not exactly sure. Okay. Oh, all right. Okay. So anyway, yeah, but so what we're trying, as far as I know right now, as far as donations goes, yeah, heck, that's right. Please send money orders. We're having PayPal issues right now. I think we're probably going to be moving away from PayPal, but yeah, and if you just go to that website, scroll down to the bottom of the site, and it tells you exactly how to send a money order or a check to help support the station. Just send that to Terry Ackerman, aka Lady Horse. Terry Ackerman, 1793 North Edon Road. That's Edon, North Edon Road, Allen, Michigan, 49227. Once again, please donate. Help us out. Terry Ackerman, aka Lady Horse, 1793 North Edon Road. That's spelled Edon, Allen, Michigan, 49227. So right now we're trying to go the snail mail route. So help us out. All right, moving on. Let's see here. I thought there was another programming note that I'm missing, but I can't think of it offhand. So moving on. Moving on. Dang. So anyway. Okay. All right. So here's the market roundup as of 12 p.m. in London, 7 a.m. in New York. U.S. stocks were set to rise with futures underlying the S&P 500 and the Dow Jones Industrial Average up 0.4%, and NASDAQ futures up 0.5%. Asian equities climbed with China's Shanghai Composite up 1.8%, Hong Kong's Hang Seng up 2.6%, and Japan's Nikkei up 2.6%. European markets were jumping with Germany's DAX up 1.3% and the Euro Stoxx 50 up 1.34%. Oil prices climbed with West Texas Intermediate up 1.2% at about $59.90 a barrel, and Brent crude up 1.5% at $65.20 a share. The pound held on to post-election Thursday evening gains and was up 1.7% to $1.34 on Friday morning. The FTSE 100 benchmark of UK large caps rallied 1.9%, weighed down by internationally focused companies that decline when the pound rallies. A higher pound devalues revenue generated abroad. Move in on. Okay. Coming in early wouldn't make you. Okay, so. Oh, come on. Okay, the Tesla Cybertruck will be a medium-duty truck, report says. Okay, once again, yeah, I'm thinking this kind of smells like a product placement ad to me, but we'll see. If it gets a little too propaganda-ish or product placement-ish, I'm going to move on. Hello. Hello. Okay, so the Tesla Cybertruck may be even bigger than it looks. What? Okay. Automotive News has uncovered a letter sent by Tesla to the... Oh, leave me alone. It'll be enough of you. Automotive News has uncovered a letter sent by Tesla to the California Air Resources Board in support of a stronger mandate for zero emissions truck sales in the state that revealed the automaker expects the Cybertruck to be certified as a Class 2B to 3 medium-duty truck. That would put it in the same segments as the Ford F-250 and F-350 rather than the light-duty F-150. Elon Musk often compares it to and pitted against in a controversial tug of war. What? Elon? Okay. So, let's see here. Okay. But, okay, that's in... Elon Musk spotted hitting the town and a sign in this... Okay, all right. This is starting to seem like just a big commercial for the Cybertruck. So, hey, you get what you pay for, I guess, when you're looking for free finance news on the internet. So, okay, but all right, they like to sneak those in. The PR people from various companies, they like to. It's a legitimate business practice, I guess, but at a certain point, it just becomes reading a commercial for the Cybertruck. Bitcoin's best ally is just time. Pompliano. Okay. From the fine folks at CoinDesk. All right, this post is part... Oh, shoot. Okay. Blah, 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 blah. Well, it's part of CoinDesk's 2019 year in review, a collection of 100 op-eds, interviews, and takes on the state of blockchain and the world. Anthony Pompliano is the co-founder of Morgan Creek Digital. Anthony Pompliano is one of Bitcoin's business boosters. His Twitter feed is a hurricane of crypto news, self-promotion, and inspirational quotes for holders of heavy bags. He ends every week with the summary of Bitcoin. Okay, anyway, I'm going to move on from this guy. Just because I think he's somewhat of a pump and dump guy. So I just. That being said, let's see. I guess I'll see if he has anything to offer, but I think this guy definitely has ulterior motives for everything he writes. So let's see. He's trying to pump up the. But okay, let's see. Well, shoot. Let's see. Well, I'll see. I'm gonna go ahead and read some more, but if it seems a little bit too commercial-ish, then I'm going to move on. Okay, so his Twitter feed is a hurricane of crypto news, self-promotion, and inspirational quotes for holders of heavy bags. He ends every week with a summary of Bitcoin's biggest accomplishments, always including the unironically cheerful Bitcoin, still not dead. This past year, Pop served as crypto's ambassador to traditional finance in appearances on CNBC's Squawk Box. Sorry. He also defended Bitcoin against notable skeptic Shark Tank's Kevin O'Leary just this week. He called out Mark Cuban for saying Bitcoin has no chance. Pop's playing the long game. Not only will Bitcoin survive, but it will become the world's reserve currency, he believes optimistically. CoinDesk caught up with Pompliano to discuss the year in crypto, how to strike successful investments, and the ups and downs of being a public figure in crypto. Okay, I mean, I would tend to agree with them on this, so I guess maybe I was being a little too hard on the guy. See here, you've been a prominent figure in the space for a while now. In your opinion, what were some of the most pivotal moments in crypto for 2019? If you go back to the beginning of the year, I think the most significant events were the bottoming of the bear market, Libra, and the significant advancements made in China. However, I think the most significant advance in crypto was made in institutional adoption, which doesn't mean institutions like banks coming aboard, but institutions like university endowments, hospital insurance, the real asset allocations, they have come in a material way. Why are these players coming around to crypto now? I think there is a separation between blockchain and Bitcoin, and they've gotten comfortable with blockchain. There's still discomfort with Bitcoin. It's becoming clear we'll have an automated world. And in order for that to happen, you'll need digital assets. Blockchain is just the way to keep track. It's an accounting system. I think that's why we've been successful raising capital. There's a belief system in blockchain fitting into other technology trends that investors are already buying into. This isn't anything different. It is actually just enhancing trends people are already buying into. There's a stark line in the sand between Libra and Bitcoin. That's helpful because it shows the value of Bitcoin for people. So could you spell out how crypto fits into the trend of automation and technological adoption? For us, it's a foundational component of the technological change taking place. I always joke we never have anyone come into our office and say, hey, we're building a Microsoft Excel company. If you think about automation of microtransactions or high-frequency transactions between a bunch of connected devices, there's no current way to keep track of it all. If you need interoperability between systems, these public open source permissionless ledgers allow you to do that in a really interesting way. In a really interesting way. Our investment thesis on the technology is just that blockchain will be pervasive, and to get ahead of it now rather than wait 10 years. So it's really flipping it on its head and saying it's not so much about the technology as it is finding these great companies that happen to use the one piece of technology, this one piece of technology. What was Libra's effect on investment sentiment? Libra is actually a pretty good idea. Once again, Libra, yeah, that's the blockchain technology being introduced, cryptocurrency, the Facebook cryptocurrency being introduced by Zuckerberg, Mark Zuckerberg. Libra is actually a pretty good idea from a sentiment standpoint. There's three things. One, it's forced central banks and regulators around the world to think through their approach to cryptocurrencies. Second, the response to the United States hasn't been as positive as we would have wished. There's been a lot of negative backlash, almost like a helicopter parent approach. The third thing is it's really drawn a stark line in the sand between Libra and Bitcoin. I think that's helpful because it shows the value of Bitcoin for people, because now they have something to compare it to. Do you think any of the backlash against Libra is justified? I actually think regulators should be less worried about Libra and more worried about digital currencies created by the banks. Facebook will be one of 100 corporations that governs Libra. The only way for a decision to be made in Libra is for multiple corporations across continents in different industries, some for profit, some nonprofit, to come together and make a decision. So it'd be really difficult for one player to be nefarious because your consensus is among all of these players. So compare that to JP Morgan or Wells Fargo to making decisions alone. They're the only ones that are in control. My fear with the banks is that they'll launch a digital currency. It'll be adopted and internally to move capital around. It'll move to their corporate partners. I'll gain some real transaction. You'll start using it to buy things. Then one day in the future, they'll just unpeg it from the dollar. They only have to make that decision themselves. I get that people are upset, but the nuances of the structure are more important than just a binary that this is good, that is bad. The Chinese government is also working on its own digital currency. Recently, members of the Federal Reserve have come out saying they're researching a U.S. dollar-backed stablecoin. How does this fit into your worldview? The U.S. today is in a defensive mindset where they're trying to protect the monetary supremacy they have. I have just published an article arguing that the U.S. is suffering from an innovator's dilemma. We've had it really good for a long time, but when this new technology comes out, if we don't act, it will disrupt us. So the rational thing to do is to create a digital dollar, to do exactly what China is doing, but let it stand for the democratic and capitalistic ideals we hold sacred. I still think that Bitcoin ends up winning out over a very long time period. Do you think Bitcoin's ultimate success is reliant on mass consumer adoption? It's like religion. Missionaries go to some far off land to tell people about this God and they've never heard of before. And once they hear the word of God, they become believers. Maybe. But more likely, we're going to get to a situation where you need a decentralized, non-censored, non-seizable, non-inflatable, or non-debasable asset. And when you go looking for it, you'll find Bitcoin. I believe Bitcoin's best ally is just time. And as more people get put in situations where it could be valuable to them, they will opt in. What have you learned from all the time you've been investing in digital assets? There are three big things. One, this time is not different. All of the traditional investment lessons are true here as well. Don't be emotional. Have a long time preference. Dollar cost averaging. All of that remains true regardless of the asset. Second, be comfortable with non-consensus opinions. In 2016, 2017, we were public about being negative on the ICO market, and that turned out to be the right bet. Lastly, and this comes from someone who is incredibly bullish, I am probably underestimating how big this is. That's not specifically true for Bitcoin, but for the entire industry. Who would have thought in 1985 that the internet would become what it is today? Even the biggest bulls couldn't have seen it. I think we generally underestimate what's possible over a long period of time. Speaking of not seeing things in perspective, was there anything that happened over the past year that completely took you by surprise? The whole Libra situation in general, that they moved so quickly to announce it, the backlash against them, and two, the institutional adoption. We all thought that it was going to come, but the pace at which a lot of these institutions are coming to Bitcoin and blockchain is pretty incredible. What do we overlook in the media as far as this industry? It's the issue of human nature, right? Bitcoin is the largest, most volatile, most liquid market with the price attached to it. It's also the longest standing, and it represents the ethos of the industry. It represents also the okay. So a lot of times when people are talking about Bitcoin, they use it as a stand-in for the entire industry. There's plenty of other stuff that doesn't get talked about as much as it should. But there's also a lot of other SHIT that gets talked about that probably shouldn't. All right, moving on. Moving on. Okay, so let's see here. How can you get big gains that Wall Street can't? Hedge funds. No. I'm just joking. Okay. The best performing stocks of the past 30 years isn't Warren Buffett's, Berkshire Hathaway. Oh, man, leave me alone. Come on. Leave me alone. Oh, uh-oh. Are they going to make me? Okay. Okay, the best performing stock of the past 30 years isn't Warren Buffett's Berkshire Hathaway, Inc., Microsoft Corporation, or Apple Incorporated. It's little known Jack Henry and Associates Inc., which closed down, by the way, 17%, which provides technology to banks and other financial firms from its headquarters in Monett, Missouri. Jack Henry's story is common among the superstocks, with the highest long-run return. Once tiny companies, often neglected by professional investors for years, end up earning higher returns than stocks that were far bigger and better known. Surprisingly, small investors may have a big edge over Wall Street's giants in capturing these gains. That's because to earn such superior long-term results, you have to withstand bone-cracking short-term downdrifts along the way, something most fund managers can't do. That insight emerges from an analysis by Wilshire Associates for David Salem, co-chairman of New Providence Asset Management LP, an investment firm in New York. If you'd invested $1,000 in Jack Henry stock at the closing price on September 30th, 1989, you'd have had $2,763,000 as of this September 30th, according to the Wilshire data. The same $1,000 invested in Berkshire Hathaway would have grown to $36,000, and the S&P 500, $16,000. Those figures include reinvested dividends. Earning that spectacular gain, however, would have taken almost superhuman determination. From June 2001 through October 2002, Jack Henry's shares fell 67%. Between October 1996 and October 1999, the stock underperformed the S&P 500 by a cumulative 72 percentage points. The numbers are consistent. Among the top 10 stocks over the past 3 decades, for Fair Isaac Corporation, Kansas City Southern, Best Buy Company Corporation, and Monster Beverage Corporation suffered interim declines of at least 75%, according to Wilshire. To end up earning hundreds of times your original investment, you would have had to lose at least 3/4 of your money along the way. Monster's stock dropped 92% from March 1990 through December 1995. The shares cumulatively underperformed the S&P 500 by 534 percentage points between late 1990 and early 2000, according to Wilshire. Yet $1,000 invested in Monster stock 3 decades ago grew to $506,000 by this past September 30th. Short-term pain, long-term gain. Jack Henry and Associates has earned the highest return of any stock in the Wilshire 5000 index over the past 30 years. Like other long-term winners, it has suffered severe underperformance along the way. Surely only a professional investor can withstand that kind of pain. Au contraire, says Mr. Salem. It's potentially career-ending for a manager to hold such big interim losses. I wonder if any manager has ever been able to stay the entire course with stocks like these. A dirty secret of the investment business is that fund managers don't buy and hold, not because they don't want to, but because they can't. That isn't just because clients would fire them for holding on to losers. The more successful a little company is, the faster it becomes mid-size and then large. Consider Amazon.com Inc. It went public in 1997 with a market value of about $300 million, qualifying it as a small company. Less than 3 years later, the stock had a market value of nearly $13 billion. So, small company mutual funds that owned Amazon when it was tiny had to sell it once its market value grew into the billions. Otherwise, it would have dominated their portfolios. Investors in those funds missed out on nearly all of Amazon's stratospheric growth. Small stocks earn their highest returns not when they are small, but rather as they migrate to large, according to research by finance professors Eugene Fama and Kenneth French. That description fits Jack Henry to a T. Founded in 1976, the company first sold shares to the public in November 1985. As of 1996, insiders still own 41% of the stock. Not until 2006 did any institutional investors show up owning 5% or more of the shares. Only in November 2018 did Jack Henry finally grow large enough to join the S&P 500 index, where it currently ranks 402nd by size. The stock is no longer cheap. It trades at a steep 41 times the past 12 months earnings and 8 times book value according to FactSet. But Jack Henry doesn't ride many market fads. Most of our growth has been truly organic, coming from business expansion rather than acquisitions, says finance chief Kevin Williams. Unlike a lot of larger companies, Jack Henry hasn't borrowed money to finance massive buybacks of its own stock. It has no long-term debt. On the back of the company's business cards is the founder's original motto: do the right thing, do whatever it takes, have fun. Today, 94% of Jack Henry stock is held by institutions, but it's unlikely any single fund manager has held the shares continuously for the whole wild ride. It's a wild ride. Who could, for all the talk about how individual investors have faded as a market force, results like Jack Henry's are a reminder that no other constituency is in a better position to buy and hold and hold and hold. No one can fire you for hanging on to a stock that loses 75% or more. You are free to seek value in the most obscure companies or to find hope in the darkest hour. In 1974, the financial analyst Benjamin Graham said, "I am convinced that an individual investor with sound principles and soundly advised can do distinctly better over the long pull than a large institution." He was right, and his words may be even truer today. Okay, moving on. From town to town. Oh, what's going on here? Oh, Gonna have to. Google makes moving data to its cloud easier. Okay, does it now? Okay, I don't know if this is okay. This is from the Google Finance news feed. So I don't know if this is once again, I don't know if this is paid product placement or what, but let's see if this actually has any relevance in the world of finance. If not, I'll move on. Let's see. Google Cloud today announced Transfer Service, a new service for enterprises that want to move their data from on-premise systems to the cloud. This new managed service is meant for large-scale transfers on the scale of billions of files and petabytes of data. It complements similar services from Google that allow you to ship data to its centers via a hardware appliance and FedEx, or to automate data transfers from SaaS applications to Google's BigQuery service. Transfer service handlers all of the hard work of validating your data's integrity as it moves to the cloud. The agent automatically handles failures and uses as much available bandwidth as it can to reduce transfer times. To do this, all you have to do is install an agent on your on-premises servers. Select the directories you want to copy and let the service do its job. You can then monitor and manage your transfer jobs from the Google Cloud Console. The obvious use case for this is achieving and disaster recovery. But Google is also targeting companies that are looking to lift and shift workloads and their attached data, as well as analytics and machine learning use cases. As with most of Google Cloud's recent product launches, the focus here is squarely on enterprise customers. Google wants to make it easier for them to move their workloads to its cloud. And for most workloads, that also involves moving lots of data as well. Okay. Moving on. Local market news. Dow S&P 500 decline after China announces trade deal with modest tariff reduction. This is breaking news, folks. Breaking news. 17 minutes ago, so pretty fresh. U.S. stocks traded mostly lower Friday, giving back early gains after President Trump and Chinese officials announced a trade deal that includes a reduction of tariffs and promises by China to buy more U.S. goods. Meanwhile, a decisive victory for conservatives in Thursday's UK election that reduces policy uncertainty and clears the path for Brexit also boosted investor sentiment for a while. How are benchmarks performing? The Dow Jones Industrial Average looks like closing at down. Well, it's down right now at 0.06%. Fell 44 points, 0.2% to 28,087. While the S&P 500 index fell 6 points or 0.2% to 3,162, and NASDAQ Composite Index lost less than a point at 8,716. On Thursday, the Dow closed 220.75 points, or 0.8% higher, at 28,132.05, just shy of a new all-time high. The S&P 500 index gained 0.9% to close at 3,168.58. And the NASDAQ Composite Index added 0.7% to 8,717.32, both new records. For the week, the Dow is set to gain 0.4%, while the S&P and NASDAQ are poised for gains of 0.7% each. What's driving the market? Stocks traded mixed Friday following a volatile start to the trading day, after Chinese officials held a news conference announcing an agreement on U.S.-China trade, saying it had agreed to increase purchases of U.S. agricultural products and was offering new intellectual property protections in return for a reduction in tariffs. President Trump confirmed the deal had been reached by tweet and said the new tariffs on Chinese imports due to take effect on Sunday will not now happen. Moving on. The United States and China have reached an historic and enforceable agreement on a Phase 1 trade deal that requires structural reforms and other changes to China's economic and trade regime in the areas of intellectual property, technology transfer, agriculture, financial services, and currency and foreign exchange, according to a statement by the U.S. Trade Representative. The statement said that the U.S. will be maintaining 25% tariffs on approximately $250 billion of Chinese imports, along with 7.5% tariffs on approximately $120 billion of Chinese imports, suggesting that tariffs of 15% implemented on September 1st will been cut in half. Tariffs that had been planned to go into effect on more than $150 million in annual consumer imports will not be charged because of the fact we made the deal, the president said on Twitter. Chinese officials said that the U.S. would remove more tariffs in stages, though no details were given. The deal isn't as robust as some in the market hopes for, so it's completely reasonable for the market to pull back and take some profits. Randy Frederick, Vice President of Trading and Derivatives at Charles Schwab, told MarketWatch. The market had already been pricing in the December 15 tariffs getting removed. Frederick argued that it's unlikely that further Phase 2 deal can be reached before the U.S. elections in November. The big question is whether the economic data and earnings are sufficient, plus the promise of no new tariffs to push the market higher. Meanwhile, Prime Minister Johnson's Conservative Party swept to a landslide victory in the UK election Thursday, securing a strong majority in Parliament. The convincing win gives him plenty of support to secure a Brexit deal and negotiate a new relationship with the European Union next year. Brexit questions have been cited as one lingering headwind for global investors. Trump congratulated Johnson on his election victory early Friday via Twitter, and said Britain and the U.S. were now free to strike a massive new trade deal after Brexit. In economic data, U.S. retail sales rose just to 0.2% higher in November, below the 0.5% expected by economists. Polled by MarketWatch, through sales in October were revised to show a 0.4% increase, up from 0.3%. The figures were dragged lower by a decline in purchases at department stores, restaurants, clothing stores, pharmacies, and outlets that sell sporting goods, while internet-based sales jumped 0.8%. The cost of imported goods, meanwhile, rose 0.2%, the fastest since May, driven by higher oil costs. Business inventories rose 0.2% in October from September, according to the Census Department. New York Fed President John Williams will deliver a lecture on monetary policy to students at the Borough of Manhattan Community College starting at 11 a.m. Eastern Time. Which stocks are in focus? Broadcom, Inc. Shares fell 4.2% after it missed fourth quarter profit forecasts late Thursday, though it raised its outlook for 2020. Oracle Corp. Okay, let me see here. Got to see if we're going into break or not. Let's see. 0.2% after it missed fourth quarter profit forecasts late Thursday, though it raised its outlook for 2020. Oracle Corp. Okay, yeah, I guess so. Guess we're not going into break. So I guess I'm going to go right through the break here. And Oracle Corp. Let's see. We're under pressure after the software company posted better than expected earnings for its fiscal second quarter, but came up a bit short. Where it has struggled for years. The shares fell 2.7%. Okay. Costco Wholesale Corp. Costco Wholesale Corp. Costco, let's see, declined 1.3% after the bulk retailer reported fiscal first quarter profit growth Thursday evening that beat analyst expectations, but sales growth that fell short. Okay, Adobe Inc. Shares gained 5% after the digital marketing and media company reported fiscal fourth quarter adjusted earnings that beat analyst expectations and a more than 20% increase in revenue after the close Thursday. How are other markets trading? You got the yield on the 10-year U.S. Treasury note fell 6.5 basis points Friday to 1.836% after surging to a 4-week high Thursday. Crude oil prices were on the rise, with West Texas Intermediate crude rising 33 cents or 0.5% to trade at $59.53 a barrel on the New York Mercantile Exchange. Gold prices were also edging higher, up $4.90 or less than 0.3% to trade at $1,477.10 an ounce on COMEX. The U.S. dollar lost value against a basket of its trading peers, with the U.S. dollar index declining 0.3%. In Europe, stocks closed higher, with the Stoxx Europe 600 up 1.2%. In Asia overnight, stocks rallied, with China CSI 300 gaining 2%. Japan's Nikkei 225 adding 2.6%, and Hong Kong's Hang Seng Index rising 2.6%. Okay, let me go ahead and I'm going to take a quick break here. I'm going to adjust my Skype here. I think I might know what was going on at the beginning of the show here. So I'm going to take a quick break. Hopefully this won't sound too bad. I don't know, but we'll see. I'm going to leave you in the capable hands of the Tibetan monks. Let's see here. Let me fix my setting. Oh. Okay. Oh, man. All right. Oh. Okay, and I am back. Moving on. Okay, ladies and gents. By the way, I'd like to just say caller lines are wide open. If you'd like to call in, be a part of the big show, please feel free. That number is the guest call-in number is 657-383-1825. That's 657-383-1825. Please feel free to give us a call. If you have any recommendations, suggestions, what direction you want the show to go in, just feel free to let me know. Any questions, comments, what have you. I aims to please. By golly. All right, so moving on. Okay, so we're going to be talking about investment tips. Is 90 days really same as cash? Time for a reality check. Do you honestly think businesses are primarily concerned with your well being? Of course not. Businesses are primarily concerned with making a profit. There is nothing wrong with making a profit. It's how they will stay in business. The conflict arises when businesses offer you great deals just because they love you so much. These great deals often take the form of buy now and pay much later. A good example is the furniture business. How many times have you seen a furniture store advertise buy now and buy now and no payments for interest for 1 year? Are you really getting an interest-free loan for a year? Of course not. You will pay interest and quite a lot in many cases. There are at least two ways you will pay for that year with no payments and no interest. First, when you do begin making payments, the interest rate can exceed 18% in some cases. The second way you will pay is through an inflated purchase price, which has the interest changes built into it. Here is how it might work. The store offers the sofa and chair for $1,000 retail. The store owner paid $500 for the items. They are offered for sale at $1,000 with no payment or interest for the first year, then 18% for the next 3 years. The owner sells you the sofa and chair on the above items. Once you sign the contract, essentially a loan, she sells the note to a third party for $750. She pays off the wholesaler and has a gross profit of $250. The third party holds your note and receives your payments. At the end of 4 years, you have paid over $1,600 for the $1,000 furniture, and the third party has made an $850 profit. In addition, should you miss a payment or two, you may be liable for repaying the first year that was interest-free. Can you make these situations work to your advantage? The first alternative is somewhat unconventional, but certainly doable. If you have the money in hand to buy the furniture after the store, $750 cash right now, you would be surprised at how many merchants will negotiate prices, especially for cash. The second alternative is to agree to the stated terms, but have save up enough over the year to pay the $1,000 in full. This saves you the high interest charges. However, be very careful. The contract does not have a prepayment penalty. A prepayment penalty is a fee for paying off a debt early. Moving on. The miracle of compounding. I know a lot of this stuff is basic, but starting off with the basic stuff, moving into the more complex and interesting stuff as this analysis goes on. Once again, this is part 3, or part 2, rather, of this how-to guide on investing. So we're still kind of covering the nuts and bolts, the basic stuff. Once again, we're going to talk a little bit more about the miracle of compounding. So you were already introduced to compounding last week, but I want to build on that a little bit more. It is important that you understand the power of compounding. Okay, wait just a minute. Compounding is like the rapids on a river. Canoeing with the rapids is investing. Canoeing against the rapids is borrowing. So compounding is the single most powerful tool in an investor's arsenal. Without it, investment becomes the equivalent of putting your money under your mattress. Here is a radical example of compounding. Radical example. On day one, you give me a penny. On day two, you double it 2 cents. On day three, you double it again, it's 4 cents. And so on for 30 days. On the 30th day, you will pay me almost $5.4 million. This is compounding in just 30 days. Okay, this is compounding. In just 30 days, a penny grows to almost $5.4 million. Of course, okay, you're not going to get 100% interest unless you lend money in dark alleys and break people's kneecaps when they don't pay. Nevertheless, compounding is the basic mechanism for creating wealth. It is what will help you achieve your goals. How to make compounding work for you. The example I used involves an initial deposit, 1 penny, and interest only. What would happen if you added a penny each day in addition to the interest? If you are clever in math, you might have figured this one out. How is the problem restated? On day one, you give me a penny. On day two, you give me 2 cents. Your original penny plus 100% interest. And another penny for a total of 3 cents. On day three, you give me 6 cents. 3 cents plus 100% interest. And another penny for a total of 7 cents. And so on for 30 days. On the 30th day, you pay me over $10.7 million, double the total, the original problem. The only difference is you gave me an additional 29 cents over the 30-day period. So this illustrates an important point. Compounding can be made to work harder by periodically adding to the balance. Let us use some real-world examples. Say you open an investing account with $50, earning 10%, and every month you deposit another $50. In 10 years, your account will be worth almost $10,400, ignoring taxes and inflation. So, if you could manage to make an additional $5 deposit each month, bringing your total to $55 in 10 years, your account would be worth $11,396, over $1,000 more. Your investment increased by $600, $5 per month times 120 months. But you earned $1,000. One way to look at this is that the extra $600 you invested over 10 years earned you a 66% return. That's $600 times 66%, equaling $396. So, this process also works on loans. If you make an additional $50 per month payment, $50 per month payment on your mortgage, it will be paid off much sooner. Why? Because that extra $50 goes to the principal of the loan, and thus there is a smaller amount used to compute interest changes. The miracle of time. Part of the magic of compounding comes from how long the process is allowed to work. The more time you have to compound, the more money you will make. Just a minute. Time is one component of the investment formula. The other two components are amount invested and interest earned. So in the example above, you opened an investment account for 10 years. What would happen if you could let it work for 15 or 20 years? Here's the scenario. $50 invested at 10% interest and another $50 added monthly. For 10 years, the total is $10,372. For 15 years, the total is $20,938. For 20 years, the total is $38,314. This is why, Little's rule of investing is so important. Little is the guy who wrote the source material I'm borrowing heavily from right now. I'll give props where props are due a little bit later on. Okay, so and once again, his golden rule is the best time to start investing was yesterday. The second best time is today. Tomorrow is better than nothing. In summary, compounding is the best thing since sliced bread. It will work for you with your investments, or it will work against you when you borrow. Either way, it is the force of the financial world. Moving on. Common stock. All right, we're starting slowly moving to stuff that's a little bit more interesting to people, a little bit more sexy. We're talking about common stock. Common stock represents an ownership interest in a corporation. This ownership interest is also known as an equity interest. This equity interest gives the owner certain rights concerning the activities of the corporation. A vote at annual meetings, periodic financial updates from the corporation, a say in the election of the company's board of directors. Some major decisions about the life of the corporation, such as mergers and so on, are decided by stockholder votes. The board of directors that represents the stockholders' interests handles all other major decisions. It is not quite that pure. Stockholders' rights groups accuse many corporations of loading the board of directors with members whose loyalty may lie with management rather than the stockholders. A good example of what can happen in these situations occurred during the merger mania of the 1970s and 80s. Corporate leaders were given golden parachutes so that if the company was taken over by outside interests, the executives would walk away with huge severance settlements. A board of directors that was more sympathetic to management than shareholders might fight a merger that was good for the stockholders but bad for management. Just a minute. Most most voting at annual meetings is done by mail. Although, as the stockholder of even one share, you are entitled to attend the annual meeting in person. So, some corporations, with the approval of the board of directors, pay dividends. Dividends represent a share of the company's profit returned to the stockholders, owners. Other companies choose to invest profits back into the organization to finance growth. Even though you own a part of a corporation, you have no liability for the company's actions beyond the value of your stock. Proceed with caution. Your liability is limited to the value of the stock. However, officers of the corporation may be held personally liable in some situations where they took actions that were illegal or what is that? Or of illegal activity. Okay, illegal activity within the company, but failed to do anything about it. Okay, so for example, if you own some stock in XYZ Corporation and read in the newspaper that they have been found guilty of hunting small puppies, your only potential loss is the value of your stock, which may drop next to nothing. However, you are not going to be sued personally by puppy lovers. This liability shield is the cornerstone of confidence in the stock market. If I had a nickel for every time I was sued by puppy lovers, okay, all right, that never has happened. All right, moving on. Guess we'll leave jokes and comedy to the professionals, right? Mutual funds. This is all just broad, general stuff about mutual funds, but a mutual fund, generally speaking, is characterized as a pool of money managed by professionals with specific investment goals and objectives. These goals and objectives drive the investment decisions of the professional managers. Everything you want to know about the fund is found in a document called a prospectus. Investment goals and objectives. Every mutual fund has a well-defined set of goals and objectives. These allow investors to choose the type of fund that fits their particular investment strategy. Fund managers cannot deviate from these stated objectives. Just a minute. Mutual funds often are often named with an eye to marketing rather than being an accurate description of the fund. For example, Acme Mutual Funds might offer a fund called American Stock Growth Fund. However, when you read the prospectus, you discover that 40% of the fund is in bonds. Investing in bonds is not a growth strategy. So there are many varieties and flavors of mutual funds. In later posts or in later sections coming up. Okay, you caught me. I'm reading this directly from my blog, by the way, if you want to check out that blog. Um, yeah, by the way, I would just like to mention we're still working on getting the archives up and running at the website, freedomslips.com, Revolution Radio. However, if you want to check out uh, archives of this particular show, there's a couple ways to do that. One, you can just go to the blog. Like I said, I'm reading this right from the blog, so I'm kind of a teleprompter reader. But hey, I actually wrote it, okay? And it's going back to shoot. It's going back to yeah. You just go to blog charleslamson.blogspot.com. charleslamson.blogspot.com. Tons of great business articles there. Uh, Economics, finance, business administration, business communications, public relations, marketing, that kind of stuff. But anyway, if you want to read this analysis that I'm doing, yeah, you just go back to what was that November? Yeah, 20. Just go to that blog, charleslamson.blogspot.com. Just look on the right hand side. It's divvied up into years, and so you just go back to November 2017, and that's where this is all coming from. So that being said, yeah. So yeah, I just wanted to say that I was talking about the archives. So you can you can get the also on the right hand side of that page. There's a little list of archives, show archives there. But you can also get show archives at blogtalkradio.com/Charles Lamson. So you can do it that way as well. So that's until we get the archives up and running here. So just please be patient. Still working on that. And also, while I'm taking this little time out here to go over programming news, I'd just like to throw out a friendly reminder once again. That is, we're totally listener supported here, and so if you want to donate, once again, I think right now we're going mainly through snail mail. I do believe. If I'm wrong, please correct me. You can call into the show at 657-383-1825 or yell at me in the chat room, whatever. But yeah, we're going by snail mail to donate. And so you just want to mail a check or money order to Terry Ackerman, a.k.a. Lady Horse. She's at 1793 North Edon Road. That's Edon, Edon Road, Allen, Michigan, 49227. Once again, please, to donate, send cash, check, money order to Terry Ackerman, a.k.a. Lady Horse, at 1793 North Edon Road. That's Edon. Allen, Michigan, 49227. So send us a donation. Could really use your help. All right. Moving on. So I guess that covers programming news for now. Oop. Okay, moving on. Mutual funds. Right. I was already okay. Hello. Okay, so talk about the prospectus. There are many varieties and flavors of mutual funds. So, right, in our upcoming sections, we'll be talking about that. Um, but for now, let us broadly classify them. You got stock funds, mainly invest in common stocks. You got your bond funds, mainly invest in bonds. You got your combination funds, may invest in both stocks and bonds. You got your money market funds, mainly invest in cash instruments. These funds can be further broken down as taxable and tax-free funds. And again, by whether the fund is actively managed or an index fund. Okay, so if you are getting a mental image of a massive grill filled in with many different combinations of funds, you are right on target. However, it is not as confusing as it may seem at this point. Right now, we are stepping back and looking at the big picture. In later sections, once again, I'm thinking this is probably going to be a 6 or 7 part series. Or I don't know, maybe not that many 5-part series. We're in part 2, so we're probably going to do about 3 or 4 more shows. So right now we're stepping back and looking at the big picture. In later posts, we will focus on the main types of mutual funds, and this will all seem much clearer. Performance history. The prospectus will also provide a section with some history on the fund and how it has. Okay, I gotta go into break. I gotta take care of some business here real fast. Hate having to do this, but. Hello. Yeah, hey, I gotta call you back. Let me call you back in about a half hour. Oh, okay, cool. All right, I'll see you then. All right, bye. All right, ladies and gents. Sorry about that. Here we go. Sorry. Oh. All right. Sorry I have to do that, but had a very, very pressing call right there. I got to call back into Blog Talk Show.
Welcome to Blog Talk Radio. Please enter your host pin when finished. Press the pound key. To start your show now, press 1. To hear important instructions, press 2. Since it appears you're calling back into a live show,
Hello, we are reconnecting you now.
Thank you, Blog Talk Lady. All right. So, ladies and gentlemen, calling lines are wide open. Got about a little over 20 minutes left in the big show. That number would be 657-383-1825. 657-383-1825. Please feel free, if you want to let your voice be heard, give us a call, be a part of the big show. All right. Now, moving on. Moving on. So, let me dig up this chat. Okay, right now. Okay, so performance history. The prospectus will also provide a section with some history on the fund and how it has performed in the past. How big and prominent this section is will depend on how proud the managers are of past performance. Past performance is no guarantee of future success. While this is true, looking at past performance can be helpful. Proceed with caution. Past performance may not. Okay, I just can't even read that. Type is way too small. So frequently, the fund will show its performance relative to the S&P 500. So they are said to have beat the market. Funds that fall below this mark will try desperately to put some kind of positive spin on their history. When we discuss picking a mutual fund, we will go into detail about how to use this information in making your decision. Management. Many analysts believe that the management of a mutual fund is the single most important consideration when picking a fund. The fund manager is responsible for making the buy and sell decisions for the fund. Just a minute. Avoid looking at short-term performance. Anyone can get lucky once. Look for consistent performance over a long period. So, their ability to do this with consistent success means they are well known in the business and handsomely rewarded. One of the markers analysts look for is how long the current management has been in place and what past success or failure occurred on their watch. A recent change in management may signal a performance change. Investment strategies. Mutual funds follow two basic investment strategies: active management and indexing. This is an important part of the prospectus because it tells you what to expect in the way of portfolio turnover and potential tax liabilities. Active management. An active management strategy means the manager will buy and sell stocks and or bonds in a proactive attempt to stay ahead of the market, i.e. the S&P 500. This strategy can result in spectacular gains or losses, depending on the skill and luck of the manager. It can also generate extraordinary tax liabilities when profits are made. Indexing. An index fund, on the other hand, seeks to match the market's performance by mimicking the index. For example, an index fund focused on the S&P 500 will hold a portfolio of stocks that the manager believes is a proxy for the underlying stocks of the index. The fund will then theoretically move in tandem with the index. Move in tandem with the index. There are index funds for many different indexes, and they number in the hundreds. Index funds tend to have lower costs and tax liabilities because there is less churning, buying, and selling of the portfolio. Sales fees. The fund is charged a fee to cover administrative costs, salaries, record keeping, etc., and marketing by the management company. Funds are divided into two groups according to their fee structure: load and no load. Loaded funds. Loaded funds have a sales fee or commission that is paid to the person who sold you the fund. Unless you owe your brother-in-law, the broker, a lot of money, there are not many good reasons to buy a loaded fund. No load. No load funds have no sales fee or commission, but they are not free either. You still have to pay for administrative and marketing expenses, but these should run about 1.5% or less of your assets. Moving on. Moving on. Okay. Bonds. Bonds are an important investment tool worthy of our consideration. We will look at them in more depth in later posts and show you ways to use them effectively. Bonds are a loan to a governmental unit or corporation. They normally do not have any ownership rights. Bonds are used to finance a variety of projects for the government and corporations. U.S. Treasury bonds. The U.S. government borrows money through bonds it auctions off or issues. U.S. government bonds are the safest investment you can make. Bonds are backed by the full faith and credit of the U.S. government and are free of state income tax. If the only consideration is safety, these bonds are your best investment. However, as we will learn in a later section, this safety comes with a price. The yields are at the bottom of the stack. U.S. Treasury bonds are sold in a variety of denominations, starting at $1,000 and are actually called 3 different names, depending on the length of maturity. Treasury bills mature within 1 year. Treasury notes mature between 1 and 10 years. Treasury bonds mature in more than 10 years. U.S. bonds play an important role in our economy for several reasons. First, the federal government uses bonds to finance the difference between what it collects in taxes and its expenses. Secondly, many Americans are more intimately touched by the market for U.S. Treasury bonds. Many commercial loans and residential mortgages are tied to the U.S. Treasury bond rate. When that rate goes up, so does the interest consumers pay on a variety of loans. Okay, other governmental bonds. A number of other governmental agencies issue bonds for a variety of reasons, including financing mortgages and student loans. State and municipal governments issue bonds to finance highway construction, dams, and other large projects. These bonds are usually free from federal income tax and state income tax in the state where they are issued. Corporate bonds. Companies issue bonds to finance operations and to make large acquisitions. The interest paid by corporate bonds is fully taxable by local, state, and U.S. governments. They are priced in part on the creditworthiness of the company. Junk bonds offer very high yields, but have a corresponding high risk of default. Some corporate bonds can be called, which means the company can buy them back before maturity. This can play havoc with your plans if you're not careful. For example, you often buy a bond to meet a known upcoming expense, college tuition. If the bond is called before maturity, you will have to pay another bond to replace it. If the bond market has exploded since you bought the original bond, you may find yourself short of money to buy a replacement. Other corporate bonds are convertible bonds, meaning under certain circumstances, they can be converted into stock in that company. Moving on. Oh, shoot. Okay, moving on. Cash equivalents. Cash equivalents are those instruments that serve as short-term parking places for cash. They are discussed in the following sections. Money market accounts. Okay, for now, we're just going to forgo the discussion of cryptocurrencies, which is a cash equivalent. But I talked pretty in depth about it in the first half of the show. So, once again, if you want to check that out, the first half of the show where I was talking about timely top stories in the world of finance. So right now we're talking about more traditional cash equivalents. But like I said, once again, if you missed it, if you want to check out the archive, there's two ways you can do that. Just go to the blog. It'll be posted on there after the show. The blog is charleslamson.blogspot.com. Or you can just go to blogtalkradio.com/Charles Lamson. We're still working on getting the archives up and running at Revolution Radio. So please be patient with that. Cash equivalents. Cash equivalents are those instruments that serve as short-term parking places for cash. They are discussed in the following sections. Money market accounts. Okay, I have included money market accounts here, even though they are also mutual funds, because they are designed as short-term holding strategies for excess cash. They differ from regular mutual funds in that they only invest in other cash instruments. Money market accounts typically pay more interest than regular savings accounts, although not enough to warrant leaving large sums of money in them for extended periods. If you keep an emergency cash, if you keep an emergency cash reserve, a money market account would be a good choice. They offer check writing privileges, although most have some restrictions. One way people use them is to keep only enough in their regular checking account to cover their monthly expenses. They will often deposit all of their income into the money market account and then write themselves one check to cover all the bills. Just a minute. Money market funds usually offer a better rate of return than savings and have check writing privileges, which I just mentioned. Okay. So, um, many stock brokerages or financial planners, what have you, will offer access to a money market account as a place to park uninvested cash temporarily. For example, if you sell a stock and intend to invest the money in another stock but are waiting for your price, uh, you might park your cash in a money market account. Cash management accounts. Cash management accounts are similar in function to money market accounts, but they are not mutual funds. Brokers typically offer them as a service to high-end investors. The accounts have check writing privileges and a debit card to access ATM networks for cash. They sometimes utilize a sweep feature that will automatically move uninvested cash into an interest bearing account and back into the checking account when needed. Bank certificates of deposit, CDs. Certificates of deposit are accounts offered by banks that pay a higher interest rate than regular savings accounts in exchange for the depositor locking up his or her money for a period of time. They are insured up to $100,000 by the Federal Deposit Insurance Company, FDIC, which is part of the federal government. You have probably seen the insured by FDIC signs in your local bank. About the only reason to use CDs is if this insurance is important to you. They also might be of limited value if you knew you needed a certain sum of money on a certain date in the future. If your child, say, needs a college tuition payment in September, it might make sense to park that money short term, 1 year or less, in a CD that would mature on or before the date tuition is due. As a long-term, 1 year or more strategy, they do not make much sense except in very rare cases. For instance, back in the 70s, inflation was high and the interest rates on CDs in the dollar digits. Keeping your money in a CD was common. Regular savings accounts. I have not even mentioned regular savings accounts. There are too many other places to put your money that would be more profitable. However, I would urge parents to consider opening a savings account for each of your young children as a learning tool. Make a point of taking them to a bank on a regular basis and depositing some of their allowance, chore money, or gifts. You can't start too early getting them in the savings habit. Got to set that habit. Get them while they're young. Just a minute. Open a savings account for your children and let them deposit a portion of their allowance, chore money, gifts, and so on in the account every month. This will get them in the habit of saving money and even help with planning for purchases. It is amazing to see the wheels of decision grinding in your children's heads when they realize that to buy a CD player, for example, they have to take money out of their own account, not mom and dad's. Okay, moving on. Kind of approaching the end of the show. I would just like to let everybody know once again, we are completely audience supported here at Revolution Radio. And so, that being said, to donate, that's why we were having we're experiencing some problems with the donate buttons. Just please send a cash check or money order to, let me go ahead and give that address out one more time. So while I'm closing up the show here. Whoa, shoot. I know. Oh, shoot. I know. Okay, to Terry Ackerman, Lady Horse, 1793 North Edon Road, Allen, Michigan, 49227. All right, see you later, everybody. Have a good day. All right. Bye, Blog Talk Radio people. In the episode. Okay. Okay. Yeah, in the episode. All right.
To store your most important documents. Imagine if a mega virus or a computer failure took out your bank, or all the banks for that matter. Are your banking records safe in your hands? So when they get things fixed and repaired, you can say, hey, look, this is what I had. You have it. I want it back. Is your personal data safe? Family records, addresses, phone numbers? Squeeze on over to freedomslips.com. Yes, that's www.freedomslips.com.